In today's video, I'm going to be having a look at the review of the dollar yen. As well as that, we're going to talk a little bit about mergers and acquisitions and a brief look at the Kiwi and oil. Hello and welcome to another ACY Securities market update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm looking at today is just a little bit of a recap of what happened last week. Particularly, I'm looking at the dollar yen just for a bit of a change up on what prices on currencies I'm looking at. Now, as you can see, just from a technical standpoint, it is in a downtrend. It's had a number of times it's touched off that resistance line and bounced back down. Now, overall, the dollar yen has been sitting pretty sideways. You can see the action there is not all that great. In total, its range for the week was less than 60 pips, so it has been pretty quiet for it and a little bit choppy. Now, the big factors that we saw along this chart here was for an influence of German news. Naturally, Germany has got a fair few trade relations with Japan, and so therefore that news does impact. On the outside of what's going on from Japan, there are other announcements I've put on here, and feel free to sort of pause your screen and have a Google at what some of them are. But most of the week was really dominated by what we're hearing about the Brexit. We would hear from EU ministers, we'd hear from the UK ministers, and obviously negotiators, all saying different things at different times. Most of the time it was one sort of backfasting against the other one, and therefore it's ended up in that stalemate continuing. We also know that there was a meeting last week and it didn't go quite to plan, and so now we're hearing from Boris Johnson this week about potentially a no Brexit or no deal scenario. So keep an eye on that sort of thing going on this week. I do feel we're going to see a lot more from the Brexit side of things, but also from the Fed, because we know they have a monetary policy statement coming out a little bit later in the week. Now, having a look at the big one, I've been looking at mergers and acquisitions today. I did say earlier on in this year that after earnings season and perhaps once we'd had a little bit more calm from the COVID-19 side of things, that we'd probably start to see some mergers or acquisitions of companies, or in this case, big fish eating little fish. Now, in this first one, we have Nvidia. SoftBank have decided to sell their chip manufacturer ARM, and Nvidia have put their hand up to do it and have officially declared that they will be purchasing ARM for $40 billion. It's a pretty big number, especially for a smaller size chip manufacturer. They're not small, but they're not exactly the biggest of the big either, obviously because we have Nvidia purchasing them out. The other one that caught my attention this week is from Gilead Sciences Incorporated. They are purchasing a company called Immunomedics. And what Immunomedics has developed is a new breast cancer drug. And it seems to have been doing more effective treatments than what we see from traditional chemotherapy. So therefore, we might see some interesting things there. Now, the purchase acquisition price is going to be $20 billion or nearby there. So keep an eye on that. Perhaps we might see some improvement on the stock prices for both of these companies, being Nvidia and Gilead. But either way, I'd be keeping a very close eye on the cash injections that the companies being purchased might see as well. Now, moving on, for this week, we have got a nervous start to the week already. There's been some pretty muted moves. Investors are still really pondering on all the slides we saw last week, particularly in US equities and tech stocks. Currencies have been pretty flat this morning. We've also seen people sort of thinking about that Fed news. We're expecting them to be dovish again this week on Thursday, but we'll have to wait until then. We do already know about this idea of targeting inflation and letting it run, targeting unemployment and also letting inflation run a little bit hotter. So that will probably be the focus and the first signs of what they might be doing in terms of action from the Fed on that. Now, moving on, the Kiwi. The Kiwi is under some pretty negative pressure at the moment, and investors feel like they're already starting to price in an RBNZ, or Reserve Bank of New Zealand, decision. Now, we've heard from the RBNZ a few times in the last month, perhaps even a little bit more than a few, about the potential of them going to negative interest rates. They have basically said that we're willing to do it and that we're not going to be hold off in doing it if we need to. So right now, do have some monetary policy stuff coming up for them, and investors are starting to look at the idea of perhaps they will introduce those negative rates. If they don't do it this time, the anticipation is that we might see it before the end of the year, but if not, there is definitely circumstance for it to occurring 100% sometime very early next year, maybe as soon as February. So keep an eye on that. If we don't see it this time, bear in mind there won't be too many more times that they can really put out a statement like that before the end of the year. Now, having a look at oil. Oil is having some woes again. We know that there's been less demand in the last couple of months, or at least most half of this year, but oil traders are already starting to buy up and start leasing tankers for storage. Now that's a sign that they feel that there might not be a demand improvement and that they might need to actually start storing barrels of oil yet again. BP has even said that the era of oil demand is over, and that's been as recent as of the last week. And now we have OPEC struggling to get prices back up there, and of course that production number is still challenging for them. They want to increase production, but at the moment they do that, they're going to see another oil glut. So right now, it is not looking like it's a good scenario for oil. Currently, WTI sits in about the $37 range, and we're obviously going to be seeing Brent a little bit higher than that. But of course, if we do see another glut start, or we do see more production starting up, we will likely anticipate seeing prices come down. So don't forget to keep those stop losses in, particularly if you are long on oil, or at least trading in the smaller ranges. Now, having a look at the wrap for the week, S&P 500 has had little change. Majority of these have had little change. The Nikkei, the ASX, the Euro, all have had very minimal movement. In fact, when we look at the dollar yen, you'll see that it's really only down 13 pip from the previous week's open. Now, as well as this, we're looking at the yen being steady because of that factor, and we've got WTI down, gold sitting unchanged. Everything's pretty flat at the moment. So bear in mind, there is a bit of news coming out this week, and we're probably going to be waiting around until we get some more clarification on that data that we're expecting. Now, in terms of the data that we are expecting for this week, Australian monetary policy minutes tomorrow. We also have unemployment claims coming out this week, CPI from the UK, and of course, US retail sales, an FOMC statement on Thursday, plus Fed projections. So that's the big one that I'm looking at this week. It does have a major impact. It is a red signal sort of for it. We've then got unemployment data for Australia, and then the final one is monetary policy from the UK. So you can see this week is going to be quite a busy week on the central bank action, and we should all be keeping our eyes glued to the screens to see what happens when it does come out. Now, if there's anything from today's video you'd like to get in contact with me about, please feel free to shoot me an email at talktoal@acy.com. And of course, don't forget to like and subscribe this video so you get more great content from me and ACY Securities in the future. Have a great trading day ahead.